cash flow. I mean, it's just, gosh, what else can we talk about? I mean, it's just cash flow is the blood in your body.
I
Yeah.
I think you gotta watch where you get your information from because again, very few of these even best practices groups, consultants, trainers, etc., focus on that important piece of it. It's mostly around different systems or say it like
They don't focus on it
most
at
of the
all, sir.
training, most all the gurus out there selling their training services, like the majority of the focus is on sales, revenue,
Yep.
objection handling. It's all
From Sarah Systems and Billy Go, this is No BS with Billy Stevens and Landon Brewer, the unfiltered, straight-shooting podcast that dives deep into the heart of home service trades to uncover the truth about running your business. You're entering the No BS zone with Billy and Landon.
Hey, everybody. Welcome to the No BS show with Billy and Landon. We're so glad to have you with us today. Of course, we have all the coolest topics that you could ever imagine in this show, and we have another great show today. I think you're going to get a lot out of this. Landon and I were just talking about it here before we got started, and before we get any further along, let me just go ahead and introduce my co-host here, Mr. Landon Brewer. How are you, sir?
Oh, I'm doing fabulous today. We're talking about one of my favorite subjects, and it's a four-letter word that we're shortening down to three. Ish. It's a bunch of ish out there.
Oh my gosh, this is going to be something. Of course, disclaimer is this is all his idea. I'm just here for the ride. No.
Don't be talking ish already.
Oh my gosh. All right. So, hey, like I said, everybody, so happy to have y'all here with us. This is going to be good. So let's go ahead and get started here. So revenue seems like it's all we ever talk about in this industry. I did this, I did that. In fact, that came up this morning, didn't it? When we were doing our best practices group.
Yeah.
Revenue was the number one thing that gets brought up, but at the end of the day, we need to be focusing on the margins. And if we focus on the margins, we all know that revenues will take care of themselves, no matter what the revenue is. That's the beauty of it is. And so we need to change our focus over to margins. And so we're going to talk about how we do this today and how to not get caught up in what you see on social media. A lot of this stuff that gets shouted out there is just vanity. Growing businesses, when you got a money partner that's throwing money at earning businesses. I mean, let's look at it like this. You could be running a $3 million business and buy $1 million business and you just grew. But did you fix anything? Does it make any money? That's what we need to talk about. That is what it matters to me, and what it matters to my partner here as well. Is we're all about cash flow.
I mean, there's a new phenomenon that you see, or at least it seems new to me. You've been around longer, you can tell me, but this phenomenon of people growing these seemingly very large revenue, large scale businesses overnight, greenfielding them, and without any financial backing, and it's all kind of a myth. It's all kind of folklore, right? The one thing that you never hear anybody specifically tell you is how step by step they did it. Why? Because they can't. Because it's a myth. It's folklore. So I think we should clear a lot of that up. But the reason I like this topic about revenue is because everybody focuses on it. When we were asking that question to people earlier, like, okay, did you hit your budget for the month? What do you do when how are you talking to your team about it? How'd you end up? What was your target and where'd you end up? And everybody, without exception, put a revenue number in there. Nobody said, hey, are you talking about margin? Are you talking about net profit? Are you talking about what are you talking about? Everybody's like instantly went to revenue. Oh, yep. We wanted to do 1.5. We ended up at 1.6 or 1.4. And so we just missed the mark. And it's like, well, okay. But what was your budget for net profit? What were your budgeted gross margins? Like, where were those at? How'd you do against those? Because in most cases, in a lot of the companies I've worked with or partnered with in the last couple of years, we end up, it's many of the cases, not even growing revenue, shrinking revenue, getting the business right sized and elevating profit and taking profit through the roof. Some of them will gradually or methodically or strategically grow revenue to a certain point because we hit a nice profit target, right?
Sometimes you got to cut the lesions off so the company can heal, right?
Yeah, I mean, sometimes the bigger you are, that like, again, there's other organizations out there that shall not be named shall not be named. That I partnered with a lot of their companies, and I've got Nexstar memberships, right? But and I love Nexstar, probably the best of the cream of the crop when it comes to best practice groups that are old traditional style best practice groups. They have, in terms of cream of the crop, in terms of the people that are members. Well, it's like they all have the same footprint. It's like they were all coached to, okay, go start plumbing, then hire a plumbing manager, then hire a service manager for that, then put an install manager in place for that, on top of this manager over here and that manager over here. And now we've got all of these things, and you have this big bloated business that went from 5 million to 15 million and makes the same amount of money they were making at 5 million and has no cash controls at all instilled in the business. And so now it's just kind of this bloated, heavy thing that's got more risk, more difficult to operate, and isn't making as much money as they were making before they did all of that. So, and we've done a lot of those corrections, and those are my favorite because it's like, all right, you just don't need a lot of these people. You don't need this. You can reallocate this over here and then, cut this back and, put these controls in place, and all of a sudden you're making a ton of money. Those are big turnarounds. But this idea of having to go from, a couple $1 million to $20 million overnight, and that's what you call success, is just ludicrous to me. Like, I'd be willing to bet that most of the $10 to $15 million businesses out there aren't making as much as some of the $3 million businesses that I partner with.
Oh, I would second that. I see that quite often. Yeah. I have an interesting stat here that I've read. It said that 60% of the companies that go out of business were making a profit. What? How is that possible? I mean, think about it. I'm going to read this again. 60% of the businesses that go out of business or file for bankruptcy were making a profit. Now then, if they were making a profit and they were going out of business, what went wrong? It's cash flow, right? So it doesn't matter. It doesn't matter if you were a $1 million or a $10 million business. If you can't contain your cash flow and improve it, it doesn't matter. At some point, there's going to be a failure. And it doesn't matter if it's $1 million or 10 million in revenue, it won't save you. You have to have cash flow to survive anything. And that's
what investors are looking for, right? That's what private equity is looking for. That's what you as the investor in your own business should be looking for, increasing cash on cash returns. And most people have no idea, they can't even conceptualize that. Most people equate profit with cash. Right? That's probably one of the most frustrating things that I hear from people is like, well, I'm doing what you're telling me, but I'm more profit, but my cash is drying up. It's like, okay, well, how's your cash being managed? Well, how are you paying your bills? Your AP person just pays bills whenever they have a certain amount of money, and do they run it by you? And you're like, oh yeah, pay that. Is there a strategy at all involved in what bills you're going to pay, how you're going to pay them, when you're going to pay them? Is there are you running cash flow projections? You're probably not doing. That's probably one of the more difficult and more advanced things that people in our industry just don't do, and it's probably the most frustrating.
It is very frustrating, but it's such an easy thing to fix and then see the effects of it so quickly. You can get your arms wrapped around it. I mean, one of the quickest way to do it is stop owning inventory. That's a ton of cash right there. All right, that's just something you could start doing this week. It's stop owning the inventory, return everything you have, and floor plan it. And all of a sudden, you have some cash that you didn't have. And now you're paying for something after you sell it instead of before you sell it. And you can pay, and if you do your strategy correctly, you can pay for it way longer after you sold it. Up to 45 days and pay it early. You can pay it early and pay 45 days later. That is what you have to learn. And, that is more important than anything. Is we got to have cash flow no matter where you are in the line of business. I mean, you can everybody thinks, I hear this all the time. I'm at 3 million or I'm at 1 million, whatever they're at. If I could just get to the next level, like I'm at 3, if I could get to 5, I could solve all my problems. So what they're doing is they're taking the extra 2 million in their head and applying it to their problems, but yet they're not taking out the cost of running the business at 5 million, which is more expensive than running it at 3 million, because now you need more people to do that. And we have to stop focusing on revenue as the success of our business. It is part of the formula, but it shouldn't be the focus. The focus should be the efficiency of the business while you're building revenue. You do it like that, and it's a totally different game for you. Totally different game for you.
Yeah, I just got off the phone right before this with a friend of mine in Virginia. It's got a big business for out there, and had gotten really bloated and was making no money, and had put a different manager in charge and just taken the eye off the business a little bit, and then came back in and researched what was going on. And people were like, way too many people. People were overpaid, bad comp plans, and so they got that person out of there, started redirecting the comp plans, getting a little bit more accountability. People started scattering like they do when you have accountability, right? And then coming in here, joining, putting call by call, starting to do the basics. And all of a sudden they're freaking out because the revenue has shrank. And, it's like, oh my gosh, I don't know what's happening. And it's just this unnerving thing going from 15 million to, $12 million run rate or 10 million, whatever it is. And then he said at the end, he goes, but last month it was a record profit month. And it's way more profitable than we were last year, even though we were significantly higher in revenue. And I'm like, why are you concerned?
Yeah.
like you should. That means you should be creating way more cash. You're clearly more efficient. Like you should be excited instead of concerned that you're not hit. Like you're looking at like something in people's minds just gets triggered around revenue.
It sure does. And you'll never hear me mention revenue without the margin along with it.
Yeah.
I always put the two together so that I can show you that both are possible. They are so possible. And so, we had 2 records this month. We went over 2 million in revenue for the first time, which was a record in revenue. Okay. Back to the revenue part. But then we increased our EBITDA at the same time by about 3.5 points. 3.5 points. Yeah. Like not a full 3%, but 0.3, which was an improvement in EBITDA while we grew 60 something percent. That's what I like to do. I want to, if I can improve my margin at the same time that I'm improving my sales. Now let's talk about revenue.
Yep.
Now you have a reason to talk about revenue. And so that is what we want to focus on is as owners, as entrepreneurs, is how do we increase cash flow while we increase revenue, or how do we increase cash flow while revenue shrinks? And there is nothing wrong with the Great Reset. I call it the Great Reset because, oh man,
start calling you Schwab.
It's liberating. It is so, isn't it though? When you do this for these companies and they get rid of the waste and they get rid of the dead weight and the people that probably shouldn't be there. I mean, that's just cleansing your business. And guys and girls that are listening here today, it's business. It's not personal. This is business, and it's your business. And you have to do what it takes to make that a strong business. And we can't take it so personal. We can't. We have to remain business-minded and do what's best for the business. And if you do what's best for the business, you'll do what's best for your employees, because then you can afford to.
Well, let's talk about cash flow for a second, because I think that's an interesting concept that's probably not talked about enough. Profit is an EBITDA. Like people get the buzzword of EBITDA now, especially with private equity and valuations and all that. But really nobody focuses on how to, or even teaches a lot how to manage cash flow. And here, the case in point is, we partnered with somebody, and we're going through looking at taxes, and we're looking at the delta between profitability from one year to the next. It was pretty significant. It was like $700,000 more of profit, right? And he's like, I just don't understand it. Like, the money is not sitting in my bank. I have less money in my bank than I'm used to having. How are you telling me I made $700,000 more profit? And so you just kind of go through and you break it all out. You say, look, see this number here on your balance sheet. This is your assets and these are your liabilities. And if you noticed, the beginning of the year, you had, $800,000 less liabilities, or more liabilities in the beginning of the year than you have at the end. And the assets stayed about the same. That means you paid down $800,000 worth of debt.
Mm-hmm.
Now, had you not done that, that money would be sitting in cash. And that's how the balance sheet works, right? You have to pay your debt, and you have to have a debt schedule, and you have to pay, you have to have a cash schedule. And I think really nobody does that very well unless they've got a sophisticated team behind them doing it. So,
That's
how did you manage cash in your business?
That's a great question. Well, I learned once I understood my P&L and how I needed to have each line item in a specific area, percentage-wise. I use percentages on every line item in my P&L statement. And then once I had my P&L statement dialed in the way I wanted it, then I moved my focus to the balance sheet. And so I run my businesses not off the P&L. I use the P&L as a scorecard, right? Am I doing my job? But I use the balance sheet as how well is the business? How healthy is the business? That is where you should be operating from. Are you improving the equity in the business as you move through your journey? The way you improve your equity, like you said, you have cash on hand, you have assets, and then you have the liabilities, and your assets should outnumber your liabilities, and then you have a positive equity in the business. And the higher that number is, the more healthy the business is. And the balance sheet doesn't lie. It will tell me when you look at a P&L and it looks okay, the balance sheet tells me the story of what happens. And I don't think contractors look at the balance sheet whatsoever. I don't think it's even what they look. I don't think they take 5 minutes to look at the balance sheet. I think they look at the P&L, but they're not looking at it unless it's some kind of KPI somewhere. We're looking at KPIs, but we're not really focusing on the financial statements, which to me is the ultimate KPI. All those other KPIs roll up to the P&L. All the P&L rolls up to the balance sheet. And so you can have all the KPIs you want, but if it's not helping the P&L, you need to reassess your KPIs. And there is no reason why these businesses cannot make 25% EBITDA or more. And that's what I'm flushing out. That is why I got back into the industry, to prove to people that this is possible. I was making 24% EBITDA before we had software. Why hasn't that gone up? It's not gone up at all. There's all this software out there, but none of it helps you improve your margins and helps you improve your cash flow. You know what I mean? That's why I'm here.
Here's something that I don't think you talk about enough either, because you just said why I got back into the industry, and the things that you're talking about, in my mind, are the right way to think about it. But I think maybe the reason, like what's at the heart of a lot of this stuff, is how do you perceive yourself as an entrepreneur? How do you perceive yourself in your business? Many people associate the business with themselves, their sense of self-worth,
their identity,
right? Or with their position within the business, or my role is this in the business, and they're an employee in the business. I think the right way to approach it, and maybe you got that persona, you have to have another persona. If you're going to own a business, be an entrepreneur, you have to have the persona of, I'm a shareholder of this business. I'm a stakeholder. I'm a shareholder of this business. And from the perspective of a shareholder, I need to be looking at broader things other than, how to put out fires in the business or, perform whatever function. I need to look at, hey, I invested a certain amount of money. I expect a certain amount of return for that money. And, I have this machine that's going to crank out this return for me. So you said something that I took a note of here was, improving equity in the balance sheet. So your reward as a shareholder for improving the equity in your balance sheet is what? Well, it's either a more valuable asset that you own or more cash flow, more money that you can take in distributions from that asset, or both.
Yeah.
Both in most cases.
Both.
And so I don't think that most people come at the business from that perspective. They come up from an insider. I'm in the business. This is my function. This is me. They don't come at it from an outside perspective of shareholder. And that's why you're so focused on efficiency and every dollar that I put in is going to yield me something. And I'm got my profits dialed in and because you don't come in at it from here's my function in the business. And I think that's where most people just have a disadvantage because they don't know to do that.
Right. So I want to clear it up something here just to make sure everybody, knows a little bit about me. I'm not a trained accountant at all. I didn't even go to college. So I don't have any accounting skills. But what I do have is I'm always I always ask questions. I always want to learn. And so I learned how to do this by learning from others, like my banker that loaned me the money to buy my first little company. He said, I'll loan you the money, but you're going to park your butt here on the 15th of each month, and we're going to go through these financials. And that was part of the deal. I had to do that. And thankfully, thank goodness I had a banker like that because he did teach me because I didn't know. And when we don't know, what do? We sweep it under the rug. We don't think about it. And so we just continue to do what we're doing. And it goes back to my favorite quote, the magic you're looking for is in the work you're not willing to do. And so if you're not willing to learn how to read your financials, then you're never going to find the magic that you're looking for, which is the cash.
Well, yeah, I would go so far as to say if you don't become a master of your financials, if you don't understand your P&L and balance sheet, if you don't understand cash flow and how to manage it from that perspective, it's like a deadly sin in business. It's a deadly sin in business.
Ultimate sin.
For. And, one of the things that I hear said all the time is that sales hides sins. And that may be the case, maybe temporarily hide sins. It will catch up with you.
Well, let's go back to
most sins will catch up with you.
Let's go back to my stat. Yes, sir. Let me go back to my stat here. 60% of the businesses that fail were making a profit. So that goes right in line to what you just said. It will catch up to you. It will at some point, no matter how great it's going. So what we're trying to do is just get you to focus on other things other than the stuff that's right in front of you. We need to look beyond the obvious and start looking into our business and working on it. That's what working on the business means. It's learning how to read a financial statement. It's learning how to improve the balance sheet. If you are a KPI person and you got all these spreadsheets and you don't have any cash, you're not paying attention to the P&L. The P&L will tell you where the problems are. It'll tell you exactly what's going wrong. And I see this so often. And I think the number one culprit to businesses not making money is the stupid pay plans we create to keep people working for us, how crazy we make them. Commissions, hourly, spiffs, all these different things that we do that end up eating up all the cash. And you're not really paying your techs any more than you were. It just costs you more. Labor management and labor controls. And how do you pay someone twice as much as the industry amount and it costs you half as much? I mean, that's what you need to learn. Not pay twice as much or half as much and cost you twice as much, right? We got to learn how to manage labor, number one. Number one. That is the biggest expense. When you look, if you were to break up your financial statements on a percentage basis for every line, there's only one line that has a bigger percentage than labor.
Yeah.
And it's the revenue line.
And so let me tell you a quick story. So a number of years ago now, I actually had a, well, names will protect the guilty here, so I won't name too many of them. Had a guy that worked for me, was a charismatic sales guy, and just, one of the best salespeople I've ever met in my life. And he ended up starting his own business and did well. I had actually left. We'd finished our ARS deal. I left and was back in St. Louis for a little bit and wanted to get back out to California. And I reconnected with this guy, and his business had grown because he just attracted all the talent, right? He taught everybody how to sell. And he went out and he recruited all of the people, and he started paying these massive, I mean, it was crazy. He was paying some people cash, like very large sums of money. And his philosophy was, hey, if I'm just going to put everything I have into marketing, and I've got all these sales guys that I can train and spin them all up, and I can get all the talent, and we can build this revenue machine. And that was really kind of the end of the plan as far as I could see, because when he called me, he's like, hey, I really need help, need your skill set, could you come out here, partner with me, let's figure this out together. And so I flew out there, started taking a look, and dove in and brought in, my accounting team, and did the same thing. We had 12 people in that. He had 12 people in his accounting team at that time. We brought it down to 4.
Oh my gosh.
And, so I go in there and owed, I think we owed, it was millions of dollars of bills that we couldn't pay. Right. And I was looking at, the first thing you start looking at too is operational efficiencies and labor. So I said, well, who's doing the payroll? Let me see how you do the payroll. All kinds of crazy stuff going on in payroll. So I said, you know what? My first job is I'm going to become the payroll manager. So I'm managing the payroll, and I'm approving commissions and everything, and they're giving it to me, and I'm going through the commission sheets, and they were all just incorrect. We weren't abiding by the payroll, like none of that stuff. And so I would all change it. And to the point where all of the employees, we had like 80 employees, they would get their worksheets back, and they started calling me per Landon, because it was all paid per me according to the pay plan instead of what they were getting paid before. and anyways, one of the unique things that he was doing to try and manage the cash flow situation was, we had some big box stores, and this was crazy when I found out he was running several $1 million through these big box stores, and decided that he, instead of informing the big box store when we would sell it, we just wouldn't tell them. And, he would send somebody out to go get whatever gift cards or whatever associated with it, just send it direct to the customer and hope that the customers didn't tell the store, and he wouldn't have to pay the fee. I mean, and again, you always get caught. Like there's no sin. They're like you just can't do things that way in business for long. Otherwise, karma's going to bite you in the ass, and it did in remarkable ways. But that was a perfect example of this business that got spun up to this, got brought down to this. Eventually, it got all of the wackiness and stuff cut out of it and became profitable. Eventually, the business became profitable and sold. But man, that was one of the wackiest, wildest ones that I've been a part of. Have you seen some pretty wacky ones?
Oh, daily. Sorry, but it is daily. But it all comes down pretty much to the same thing. No one's looking at the books. They look at KPIs that they learned from a guru or from a best practice group, but they're not actually looking at the books. They're not really doing anything in the books. And when I talk to accountants, about how we make, QuickBooks, the direct integration into Sarah, and get their feedback on how they would like to see it and stuff. The first thing they tell me every time I talk to these accountants out there is, oh my gosh, these business owners don't even look at financial statements at all. I always get a pile of stuff that I have to untangle to get them back to net zero, or what we consider net zero in the world of finance, of financials. And it's the same story when I talk to them. It's every single company that comes to these accountants have such bad books, and their thoughts are the same. If they would just start focusing on this, we could really do a lot. And so it's not 9 out of 10, it's 10 out of 10. It's just and it doesn't matter. I've seen $20 million companies, same thing. Just not paying attention to the numbers. And
that business spawned some of these wacky characters that you see out here that build, these supposedly fast-growing, high-paced businesses out here in Southern California. That business, all of the people kind of went through that, and so you saw all the same similarities, right? So they go over there. My favorite is they'd pay, like, here, $10,000, $15,000 bonus for an experienced technician or salesperson. Come over, we're going to pay these $10,000 bonuses. It's like, okay, off the bat, the money's got to come from somewhere, right? $15,000 to show up. Well, it's going to come out of somewhere, and you're seeing, like, these companies that have 40%, 50% direct and indirect wage. It's crazy.
It's so bad. It's so bad. We're quick. I mean, as an industry, when I talk to a lot of companies as well, I mean, we're quick to blame, like, I don't have enough calls. Whose fault is it every single time? It's always the marketing company. But then I'm like, all right, well, how many calls have you missed today? Well, we don't miss calls. Oh, yeah? Have you checked? Because if you don't, you're missing calls. I promise you. How many jobs does your CSR have? Well, there's CSRs. No. How many duties do they have? Well, I said, what else do you have them doing? And I want you to write them all down, all the different jobs you have a CSR doing. And lo and behold, it's 10 or 12 different things they have them do, right? And I said, they have 2 jobs and nothing else. Outbounding and inbounding and nothing else. Solve your problem. That's how you get your calls. That's how you stay busy, is because we give everybody all these different duties, and they never do their job very well. And it's the same thing with reading financials. You're so busy with all these different duties that you're neglecting the very thing that's going to make the difference.
And it's the same, like, personality type too that I see in these businesses, like the same ones that are these, charismatic, high energy, sales driven people that are going out and blowing these businesses up, are the same ones that have the most chaotic, the most chaos going on inside their businesses. Mm-hmm. It's the same ones that are, like you're saying, are assigning, the CSRs doing the work of the warehouse person and the CSR, or just the craziest behind the scenes operations and no controls.
But here's what I found. So I don't want to stop you real quick because it just popped in my head. I mean, I am inside of a lot of businesses, right? And the thing about it is, these guys that are got these astronomical growth, they're just flat out lying. Because one thing I noticed about Southern California, when you do 18 million in revenue, you say it's 100. When you do 20, it's 150.
Yeah.
I mean,
yeah.
And when I'm sitting there looking at it, and I know exactly the number, and then I see a post,
It's like, what's the point? I mean, to me, all things being equal, you got to scale the revenue at some point. But when I see some behemoth company that is 20 million for this, all I see is, unless that is just a dialed in, efficiently well-oiled machine, that is just pure chaos and terror and stress and agony. And why would anybody want to put themselves through that dumb shit? Yep. Like, just dumbish. Sorry, I shouldn't say the word. Like, why would you want to put yourself in that level of potential liability, stress? It just doesn't make sense.
No.
build yourself a nice $7.5 million business that's putting 20 points to the bottom, and then gradually elevate the $7.5 million. Like
Yeah.
it doesn't make sense to just, throw it all on black and
Right.
roll it, and then we'll focus on profitability when we get to 25 million. It's the dumbest thing I've ever heard.
It works in software. It doesn't work in trades. Because
But software, you software guys, you don't have to worry about making money ever. It's like there's some endless. It's like you're the Fed. You can just print endless money and get these crazy valuations and never having to achieve a profit. Like, I should have been in the software game. That's where it's at.
Yeah, that's it. But
you guys just got a couple of people in the back, you're like sitting in some foreign government somewhere in a closet, and then you're just making money off of it.
There you go.
That's all you guys do.
Yeah, that's all we do. Sit around. Awesome. No, but guys and girls out there, got to get on these financial statements. If you don't know how to get started with that, first of all, you should lean on your CPA. And if your CPA can't give you good advice on that, then you need to probably find another one. There's a few that we can recommend. Also, we can walk you through. I mean, pretty much, if someone sends me their financials, I'll turn them back over to them in 24 hours and tell them everything they need to do to fix a company. So it's not that hard. But the number one thing you need to do today is get your percentages on the line item of every month and year to date. Get those percentages on every line item by the month and year to date, and then start focusing on the percentages of where you are. If your direct labor is over 25%, you have a problem. If your direct labor is over 30%, you have an astronomical problem. If it's anything over 30%, it's a matter of time until the business will cease to exist.
Well, man, sorry now I'm cutting you off, but I just had this flash. The other absolute terrible advice that I see out there, and this isn't just coming from, the new age 20-year-old guru. This is coming from big organizations and, older established, different groups. But this push to be all things home services is potentially one of the most dangerous pushes that you can see. I've worked with some people that, actually came from outside the industry in a few cases, and, bought into the industry, and then we're told, hey, air conditioning, well, you got to do plumbing too, and do electrical and do roofing, and they just go out and they get the license, and then, they put the money out and they're generating sales, but it's just, there's nothing at the bottom of it. So my position is, I agree. I think you should do, multi-trade. I think there's a lot of advantages in multi-trade, but don't do it until you mastered one trade. Don't do it until you've built a system whereby, you put your, 25 cents in and it comes out, $2 at the bottom or whatever. Until you've built that profitable infrastructure, don't just go out because, I can bolt on and do $2 more million if I add plumbing. Don't do that.
Thinking about the top line doing that.
Yeah. That's they all encourage it to generate more top line revenue. And sure, you can offer more customers, more, same customer base, more services, make more money. I get the logic behind it, but it's potentially catastrophic if you don't have a very solid foundation built. Now you're just adding it because it's way more difficult than they make it sound. Mm-hmm. Right. I've also never had this phenomenon where you have one person that's just spectacular at, overseeing multiple trades at the same level. It's usually some air conditioning focused person that, okay, well, now I got to do plumbing and have a plug, or a plumbing focused person is like, oh, well, I had air conditioning. You have to have, there's never seen a GM that's been remarkable at all of them.
Yeah. And my deal is, if you don't have 20% EBITDA, do not start another vertical.
Don't do it. Yeah.
Because it'll break you. That's where a lot of bankruptcy comes from, is that just growing and changing verticals is very expensive, and it will eat up all your cash. And if you don't have any to begin with, you're just going to have less. And so going from 3 million to 5 million and just to add another vertical, You're going to have a few lean years there. You're going to not make any money when you start doing that. And so you need to have the gunpowder to do it, or at least out there, have a line of credit already available. You know, you have some cash in the bank available, because you're going to struggle. You can't build a business overnight when you're making 6%. You can't do it. There's not enough cash there to create a new business. And so that's where the struggle is. So that's a good point. You know, cash flow. I mean, it's just, gosh, what else can we talk about? I mean, it's just cash flow is the blood in your body.
I think you got to watch where you get your information from, because again, very few of these, even best practices groups, consultants, trainers, etc., focus on that important piece of it. It's mostly around different systems, or say it like
they don't focus on it at all, sir.
All the gurus out there selling their training services, like the majority of the focus is on sales, revenue, objection handling. It's a frontline employee focus, and which good stuff, right? You know, hopefully good stuff. But you know, you're taking advice. You're pressing fast forward. You don't have the infrastructure set up to even handle what you're now trying to produce, and it's just a backwards way of thinking about it. And by the way, you know, we're talking about these employee bonuses and big bonuses and all this stuff. Like, here's one thing I will suggest that I probably shouldn't even have to suggest, that I wish it was just kind of an obvious, and you know, but I've just seen this happen now. If you're going to a trainer, consulting group, whoever, or you're sending your people there to get trained, I would have at least some sort of agreement with that organization or trainer that, hey, you can't use this information. You can't solicit my employees. You can't use this as a gateway to get in and start training my people and get their information and then go compete with me, for example. You know, I've seen that happening more and more, and you'd almost think, like, what a no-brainer. Why would you ever even have to say something like that? But there are people out there doing that. So not only you have to watch what information you're being fed by these gurus, now you got to watch that they're not going to steal your employees while you're paying them to teach them.
Oh yeah, that's become very apparent in this world today, in our industry, and it's sad. It's sad that that's where it's going. But that's what's going on with a lot of trainers, or so-called trainers and stuff, is they just want that personal information of who they're training.
Could you imagine if the trainer looked at you and had an intake form and said, hey, I want to go see, you know, XYZ trainer, did the intake form, and one of the questions was, do you have the infrastructure to support this? Are you maximizing all of these things? Are you already hitting 15% net profit? Okay, great. Then I can take you on as a client and train you how to improve your sales. That would be like, that's the most honest way of ever going about it, right? But nobody's going to do that, because then they'd lose 90% of their opportunity to sell you their services.
Right. Well, this show today is, you know, at the end of the day, it's just back to the basics. I think, you know, we wanted to do a basic podcast. We didn't want to have a bunch of guests and always pitching something. We wanted to have something that gets back to the basics. And we're going to continue to hone in on the basics of these businesses. And when we say cash flow, we did it in a general sense today. And in future episodes of this podcast, we're going to dive into how you improve the cash flow. So everybody out there, just stay tuned. We're going to take particular pieces of the company and show you ways to improve the cash flow. I'll give you a perfect example just real fast, because I know we're at an hour now. But for instance, when you have technicians selling jobs, and they're multi-day jobs, whether it's in plumbing or even in HVAC, and you're having them do the work, or it's multiple hour jobs, it's typically your best-selling technicians, right? And now you're tying them up. And now your lesser performers are doing the majority of the jobs each week. Go and check that. Go and see how many jobs your top performers are doing versus how many jobs your lower performers are doing. And if you see that the lower performers are doing more jobs, more calls, running more calls, you are leaving a ton of cash on the table. Ton of cash is not being generated in your business. So these are the type of things we're going to dive into. How do you fix that? How do you get to top performers always performing all the time and not getting delayed by some other thing? Maybe it's whatever it is. So stay tuned. We're going to dive in deeper. We're going to help you get this cash flow problem fixed. And we look forward to seeing you on the next episode. And with that, sir, what do you have to say?
I don't have much to say about it.
Okay. All right, then I'll do it. Press like and subscribe. Go to our YouTube channel. Over 20,000 views. We get so many messages on Messenger and text messages about how we're really helping everyone. So jump in there, ring the bell, become a member of this thing. Let's grow this and let's learn together. Thanks, everyone.
You want a topic? Throw it in the comments.
Yes.
You want Billy to wear some weird clothing? Throw it in the comments. He's willing to do that.
I'll do whatever it takes, but I'm not going to drink one of those energy drinks, no matter what you make me do. I don't want to be like him.
Nobody does.
All right. Thanks, everyone.
See you guys.
No BS with Billy and Landon is produced and delivered to you by Sarah Systems. At Sarah Systems, we've created a better way to run your home service business and unlock unprecedented growth. Our field service software was designed by real home service professionals to help you save steps, charge for previously unbillable time, and win more business. But the true change requires more than software. Our live coaching helps you understand and control the aspects of your business that matter most. It's about time for a new era of service, and we're leading the way. If you're ready to join the hundreds of other contractors who've been able to increase profit margins more than 50% within 6 months, visit Sarah.tech today. That's Sarah, SERA.tech today.